I'm glad to welcome you to the HR budgeting course. This is our first session covering what budgeting means in HR work and what needs to be budgeted. This is where we're starting today. This is the course website and a bit about budgeting. What is it? It's the process of planning resources for HR activities and business. Without budgeting, it's impossible to manage personnel and HR, and in case of a mistake, you can waste a lot of money. So, of course, learning how to budget is important and necessary. Let's start with a brief introduction, friends. I'll tell you about myself. My name is Mike Pritula, and one of the companies I've worked for is Alpha Bank. I started my career there, then I worked at STB TV channel, then at Wargaming, and later at the startup Preplay. I worked at Ideal, consulted for PeopleForce, and created an academy as well as the PPHR product. That's my career path. Now about budgeting. Actually, I've been dealing with budgeting since my time at Alpha Bank. I worked in the recruiting department, and when it came time for annual budgeting, my manager asked me to handle it since I was responsible for website operations, organizing and participating in job fairs, and many other activities. She asked me to budget for the recruiting department. This included determining the number of recruiters, and she asked for my opinion. So I was essentially acting as a deputy. We worked together in the department for a while. So when our department grew to about 8 people, which was the maximum number of recruiters at Alpha Bank, I was already acting as a deputy. That's where I first encountered budgeting, and then at STB TV channel, I repeatedly budgeted for the entire HR department for the year, including personnel. There, of course, it was a different level. It wasn't just recruiting anymore, but included payroll for up to 2,000 employees, large sums, and sleepless nights. At Wargaming, I was involved in budgeting HR activities as part of my role as HR business partner for the global publishing division. I was responsible for 300 people there. At Preply, it was more about expense planning rather than full-scale budgeting. The company was small, so there wasn't much budgeting, though perhaps a bit more than at other small companies. That's my experience. So I'm familiar with the topic of budgeting, plus I have an economics background. Actually, I studied budgeting in my 4th year. Probably in my 4th year. I remember it was so interesting. We students didn't have businesses or companies, but we were told to budget for activities of some department. We did the budgeting, and in general, it was my first experience. I worked in recruitment for 15 years, receiving many awards during that time, but this is just for context if we haven't met before. I was even featured on a magazine cover once, have a bunch of diplomas, and spoke at offline conferences. Then, of course, I transitioned to online and continue working online. I prefer it. And I have 3 international certifications in the field. That's about me. Now about the Academy. Our Academy will be 13 years old this year. We've trained many students and continue to do so. We're now actively expanding globally, offering courses in English, Spanish, and other languages. We have a silver button from YouTube, one of the Academy's achievements, and we rely on best practices in our work. So, I've told you about myself for those of you I've never met. If you'd like, you can write about yourself in the chat or in the comments under the YouTube video for those who will be watching it there about the homework. So, in this course we have homework assignments, as in every course. Completing them allows you to receive our diploma, which we issue on the Accredible platform. It's actually a great platform. The course itself consists of 6 sessions. Today we'll discuss what budgeting means in work, and even look at a lot of information about how to budget expenses. In the second session, we'll talk about the connection between budgeting and strategy and business goals. Then we'll discuss budgeting for recruiting, salaries, bonuses, benefits, training, automation, and other expenses. We'll cover the nuances, what to consider, what not to forget, and so on and so forth. We'll examine all of this in detail during this course. And today we'll discuss the overall role of budgeting in business. What can be budgeted, how to optimize the budget, and how to link the budget to the business. So, let's get started. We'll begin with the role of budgeting. Why is it done? When you first encounter it, it might seem like unnecessary or perhaps unpleasant activity. How do we know how much money we'll need this year? What if we forget something, or suddenly need money for something unexpected? But we must understand that business has its own rules. And if we're in business, we must play by its rules. First, budgeting is a strategic management tool because budgeting allows us to align financial resources, which are among the most crucial today, with company goals and distribute them correctly. When there's a budget, financial discipline and cost control emerge. Thoughtless, inefficient, random, and unnecessary expenses disappear, because when we have a budget that we've planned, we don't get distracted by things we didn't plan for. The budget then allows us to evaluate the effectiveness of our HR strategy and assess the return on investment for the expenses we incur in HR. When business changes, when something changes in the world, we can adjust our budget to better adapt and plan our activities. And we tie the budget to business results to ensure we're spending money on what the company needs. That's the role of budgeting in business. What does the HR budgeting process look like? We'll now examine this 10-step model in detail, and I'll explain how it works. What needs to be done, in what order, and what sequence of actions to follow so that you do it correctly and don't overlook anything. So, first, any budget starts with looking at how much money we spent last year. Even if we didn't have a budget last year, even if we lived chaotically and spent money haphazardly, we still start by calculating, okay, how much money did we spend last year and on what? And what metrics did we have? So here's what we look at. The planned versus actual budget. If there was a budget for last year, to what extent did we meet it? If there was no budget, then just the actual expenses. If there was a budget and we didn't meet it, for example. If we didn't spend some money, we need to find the answer as to why. Or if there was a budget but we spent more. We also need to find the answer for ourselves. Why did we spend more? What did we overlook that we probably need to consider this year? Then we need to understand we had a certain amount of money. And what were we able to achieve with it in terms of HR results? We look at the main ones. For example, the percentage of positions filled, the time it takes to close a vacancy. This way, we understand if we had a budget that allowed us to hire staff without issues. We look at turnover and employee motivation. Again, to understand if our budget was sufficient for retaining and motivating employees. And another important indicator, which is a business metric, is staff productivity. That is, what is our company's revenue per employee and how has it changed over the last few years? Because there's a principle that this indicator should grow. If it's not growing, then we've probably planned for too many people at some point without optimizing their utilization. That's the approach. Let's move on. The second step in HR budgeting is analyzing business goals and business plans. Since HR budgeting is about planning, that is, we plan where we'll spend the money, we need to know what plans the business has, what is the business planning for itself, and what should we pay attention to there. First, whether the company's revenue is increasing or decreasing. That is, what reality we're living in. Is the company thriving or is it facing challenges? Because this will definitely have an impact on our budget. What are the company's plans? Will it increase its expenses or will it cut them? Because if a company is cutting costs, the HR budget certainly will not be increasing. What is happening with the business's profitability? Is it decreasing, increasing, or staying the same? And how much does the company currently depend on HR to implement its business strategy? Because when a company is growing and developing, it heavily relies on HR and is willing to spend more money on people. Next, the third step is to analyze our HR strategy. And yes, this means that at this stage, the HR strategy should be ready. If it is not ready, it would be good practice to pause and develop the strategy, and then the HR budget will be logical and consistent. What should we focus on in the strategy? What main goals do we want to achieve with our strategy? What support can the HR budget provide in achieving these goals? And what is happening with HR metrics? What are the trends? What is improving? What is deteriorating? Usually, if some HR metrics are worsening, it means it is time to spend a bit more money on something to improve the situation. Next, we analyze how many employees we will have because the budget depends on the number of people. This is called workforce planning. So, when we are creating the HR budget, we need to know exactly how many employees the company will have throughout the next year, at the beginning, middle, and end of the year. Otherwise, we will have a situation where we have not budgeted for something, we have hired employees, but they are lacking something. Or we even need to hire employees, but we do not have the resources, which is bad. And it is not just about the number. We need to understand roughly how we are going to provide for this number of employees. The workforce planning process also has a specific sequence of actions, and it is also linked to the company's business plan. In other words, what does the company plan to do? Based on the analysis of the business plan, we understand how many people we need and then plan our actions. That is why it is extremely difficult to create, for example, an HR budget or HR strategy when there is no business plan or company strategy in place. At the very least, we have to figure out some benchmarks, company priorities, where the company is heading, and so on. What data will be useful for our workforce planning? Typically, this includes data from both inside and outside the company. Inside the company, it is useful to understand what products are driving the business, what organizational changes are happening, what information we have about our people. What's our turnover rate? What are the demographics, people's skills, and so on? External data includes a diverse analysis, for example, understanding the labor market, demographics, skills, and so on. This includes employment rates, changes in the cost of living. So, the more information we gather, the better we understand the environment in which we have to do budgeting. Next, we analyze the staffing needs. There are different approaches companies can take to do this. It can be based simply on the opinions of managers. When the company says, "Dear managers, Give us your staffing needs. Who among you plans to increase the number? Who has enough? Who might be planning to reduce? This is, of course, a very primitive approach, because managers might generally overestimate and request too many people. So there are other options, for example, based on trends, where we analyze the number of staff depending on what they do and how it changes, the work they do, how the number of customers changes, the number of stores, and other factors. This is a more accurate approach because it has at least some justification. We can plan our workforce understanding what we're creating. For example, if we're opening a store, there's likely a plan for how many people should be there, depending on the square footage of the store. Sometimes we plan staffing not so much based on numbers, but rather on the new skills that the company needs. This approach is also possible. In fact, I'd say that for most companies, it's usually a combination of different approaches. The company applies one, then another, then a third, and gets some kind of overall picture. Next, we need to understand what's happening in the market. The larger the company and the more employees it has, the clearer understanding it needs of what's happening in the market, because then this company is heavily dependent on the market and has a significant influence on it. Sometimes a company is so large that it even analyzes how many students in a particular field universities will graduate in a certain number of years, and tries to influence it so that there are more graduates in needed specialties. It starts recruiting students from high school to enroll in the right universities, begins supporting university departments, and so on. Well, this is for large companies. Smaller companies, of course, are not as dependent. In general, we analyze a lot of things here to understand the situation. For example, when I worked at the STB TV channel and we were growing very rapidly, I came when we had 700 employees, and eventually we grew to 2,500. This was significant growth. It was rapid growth. When I was preparing the budget once again, I wondered how many television employees there were in the country overall, and I analyzed that there were 10,000 employees at that time. We had about 1,000. We needed thousands more. I realized that it would probably be difficult to somehow poach 1,500 competitors in a year. It was immediately clear that we needed to look for other sources, regions, other countries, working with universities, and so on, which we eventually did successfully, including transitioning people from other professions. We practiced that too. Next, we need to make an accurate calculation of how many people we'll have by the end of the year, and we need to calculate how many people we'll need to hire, not only to change the headcount, but also to cover turnover. Because companies often forget that we have turnover, and this also generates a certain amount of hiring. Next, we analyze the external and internal environment. This is classic. This is what we do in any planning and developing any strategy. We prepare a SWOT analysis. This is an analysis of the company's strengths and weaknesses, and an analysis of opportunities and threats occurring outside the company. And for the analysis of opportunities and threats, we also do a PESTEL analysis. This is an analysis of 6 aspects of the external environment. Specifically, what's happening in politics, economics, society, technology, environment, and legislation. Next, for our HR budgeting, we want to understand what employees think. At this stage, it's very useful to analyze any recently conducted surveys, understand what data we've collected, understand what people are saying about the company, which surveys can help, surveys on loyalty, satisfaction, engagement, burnout, value proposition, leadership performance, and of course, exit interviews. If you haven't had any such surveys, it would be very useful as part of HR budgeting to conduct one to understand what's happening with people, what might need to be considered, what situation to respond to, what to budget for. Next, for salary budgeting, it's very important for us to get a salary market overview from specialized providers who supply these reviews. These include, for example, EY, Korn Ferry, Mercer, Willis Towers Watson, Radford, and others. Next, we need to develop a strategy. It should be in place at this stage. And then, when we've done everything we've discussed so far, we're really ready to create a budget. You see how much happens before we start budgeting. And that's when our budget will be correct and effective. No one will say that our budget is pulled out of thin air. What's included in the budget? The budget includes salary budgeting. Here I'm providing a link to the file. We'll cover some more detailed aspects a bit later in other specialized sessions that we'll have. Today we're taking an overview look for general understanding and a broad perspective. We'll have a separate session specifically on salaries where we'll go through it step by step in detail with the file, spreadsheet, and so on. For now, I'm just sharing my observations on what to pay attention to so that you can form a general understanding of budgeting. And then I'll guide you through the entire budgeting process step by step in subsequent sessions. The main idea of budgeting, staff salaries, then we'll discuss vacancies, then we'll talk about revisions, then salary reviews. After that, we'll discuss bonuses. We budget by individual names. That is, we don't budget the total expenses for each person. This is the first principle. The second principle is that we budget on a monthly basis. We don't simply multiply the salary by 12 for budgeting because there are many different nuances that occur throughout the year. If we don't account for these, our budget will be very rough and imprecise. And then we might run into trouble with not having enough money somewhere, so we budget for vacancies. When we budget for people's salaries, we also budget for vacancies. We do this on a monthly basis here as well, and we budget for two types of vacancies. We remember that some of this year's vacancies, no matter how much we'd like to, we probably won't fill. And they'll carry over to next year. Plus, next year's vacancies will be added to that. It's advisable to indicate which are current year vacancies and which are next year's vacancies. I'm leaving these reference slides here too, but we'll go through them in detail in a specialized session. Today we're forming a general idea of what budgeting is. Next, during the budgeting process, we budget for salary reviews, meaning we need to allocate money for salary increases within the company's capabilities. There are different approaches here. Some companies say that we can afford to allocate a certain amount for salary reviews as a part of our profit. Some companies say, well, the market doesn't stand still, it's moving. In general, it's clear that we can't do anything about it, so we budget salaries at market level and include market changes in our budget. We'll figure out how to manage from there. If the budget is very large, maybe we'll cut some positions, or maybe we'll do something else like raise product prices. We also budget for bonuses and incentives. There are different approaches here too. Some companies say our bonuses are a percentage of profit, so we'll budget a certain percentage of the profit for that. Some companies say that our bonuses are, generally speaking, labor market practice. We know that in the labor market, bonuses average 15% of annual salary, so we budget for them. Otherwise, we'll be out of the market. Then we budget for benefits. There are also nuances with benefits that we'll discuss separately. First of all, we need to analyze who uses these benefits, because we can budget for benefits, but then we'd have to budget almost every benefit for every employee. We know that not every employee will use all the benefits. If we assume that every employee will use every benefit, we'll be very limited in our ability to plan our benefits, because we'd then be forced to greatly reduce the number. When we take into account that not everyone uses every benefit, then we can budget a little more. When we budget for benefits, it's very useful to think about how the costs of benefits relate to how effective these benefits are. I'll also share later in the course how to analyze this. Because there can be a situation where a company has very expensive benefits, but their effectiveness is low. There are times when a company has very inexpensive benefits, yet their effectiveness is very high. There's a great book called Work Rules by Laszlo Bock, former human resources director at Google. It provides many examples of how even Google, one of the richest companies in the world, a company that invests heavily in its employees, but even they implemented many inexpensive benefits. There are direct examples of such free or quasi-free benefits. I also analyzed benefits when I worked in the gaming industry. It turned out to be a very interesting table. I'll tell you about it later in the course. There were some interesting findings. Next, we might be asked to participate in budgeting overhead costs, also known as overhead. These are expenses that arise in connection with people, necessary for employee activities. For example, office expenses, furniture costs, travel expenses, events, and so on, software. It is important to find a balance here. A balance between what we can and cannot realistically do, and how we help or do not help other departments. We could say these are not our expenses and we will not participate, but then others might get offended. We can say yes, we will budget for it, but we might overburden ourselves because there is a lot we do not understand. Next, we budget for recognition of achievements. These are, the kind of awards and bonuses that arise spontaneously. Spontaneously, they are not tied to any regular systems. These also need to be budgeted so we can reward employees who have clearly distinguished themselves during the year. So we budget for this. What else? Taxation. There are nuances here with taxation. In my opinion and experience, we should not take on the responsibility of budgeting all taxes, because paying taxes, remitting taxes, withholding taxes, that is the responsibility of the finance department together with the accounting department. Therefore, we cannot and should not take on this responsibility. And if we are told we must budget for taxes, we should find an acceptable compromise by saying, okay, let us incorporate a tax calculator into our file. We will operate with this amount. For example, this is the net amount in hand or the gross amount. But all other taxes, let them be calculated in our file in a separate column, and you will budget them separately so that we do not accidentally take on any tax budgeting obligations and it turns out that the tax system changes or there is some complex system we did not account for and then the company is not ready to pay these taxes. What else is important? It is important when we are budgeting all this to understand what is happening with other companies at the same time, because budgeting is to some extent part of planning for competition. It depends on how each company budgets and how they will conduct themselves afterwards. So the more information you gather from the market, the more you understand what your competitors are doing, the better it is for you. But here you depend first of all on different sources of information, and secondly, on your connections and relationships with competitors. Ideally, you should be on friendly terms and communicate with them. This will definitely be a plus for your company. Then we need to approve the strategy and budget. And there is a nuance here too. The thing is, if you prepare a budget, give it to someone, and they say, okay, we have received it, but you do not track what happens to it next, it might turn out that someone changed your budget later. I once had such a situation. I budgeted personnel expenses, sent it to the finance department, and asked if there were any questions or if we needed to meet. They told me, no, everything is fine, it is okay. I said, good. Later, they send me a file with the budget. The finance department says, we have approved the company's budget for the year. Here is your department's budget. I look, and there are different numbers. I say that this is not the file I sent you. And they tell me, well, yes, our chief financial officer had a meeting with the chief executive officer, and they made some changes to the budgets. I asked which budget, to be more specific. Do we need to meet? Do we need to comment on anything? Did they change something? They told me no. You changed this without me. I do not agree with this. Let us do something, let us figure this out. You have reallocated things in your own way. This does not work for me. And I was forced to discuss some individual issues with the chief executive officer. For the budget that was approved for me, I asked to reallocate expenses between line items. So overall, it did not turn out very well because instead of clarity and clear planning, I ended up with a bit of chaos. But fortunately, in the end, I got all the resources I needed because working at the STB TV channel, any expenses had to be approved and justified. I never had any problems with this. There's also the issue of deadlines. I fell for that once too. When I was completely unprepared for budgeting, I had my own workload as a manager, and they told me, for example, on Tuesday, oh, by the way, we need to prepare the budget by the end of the week. I say, wait a minute. I need more time. I need to think, talk, coordinate, and gather some information. Why didn't you give me advance notice? So I was in such a stressful state, and the following year I asked the finance department in advance when we need to submit the budget this year. And for myself, I was already estimating in advance what I would need to spend time on and what to spend money on. So you should find out about the budget approval process in advance, what the dates will be, what it will look like. They sent out some files, some template. For example, at STB TV channel, the template for budgeting HR expenses was developed even before our team arrived. It wasn't very user-friendly. We had to create the budget in our own way and then sort of squeeze it into the line items that were in that budget because the finance department was somehow set up for it, and responsibly. You need to clearly understand who the person is whose approval makes your budget legally valid, and after which you can spend the money. You need to get either a yes or a no from them, or make some changes. So you should work with them, not just hand over the budget to someone who will change your budget instead of you. That's not right. Books on the subject. Well, I can't say that there are any really great books specifically about HR budgeting. I probably haven't come across any, but in general, this analytical approach to HR work is provided in a book called Measuring HR Department Performance. It seems to me that this book looks more like a reference guide. Well, at least when I read it, I had a different feeling than when I read, for example, the book Work Rules or Michael Armstrong's book about HR management. Nevertheless, I'll say that reading the book and studying the concepts outlined in it allowed me to better understand the numbers. Now for the homework, there are two options. The first is to compile a complete list of HR expenses from last year. If you cannot show the actual amounts, if it is confidential, you can modify them. Or the second option, describe the company's goals for next year, or for this year, if you are at the beginning of the year, and which HR budget items will support these goals. Well, there is an example here. What is next? We will talk about the connection between budgeting, strategy, and business goals, and calculating return on investment. Then we will go through the main budgeting items in more detail, with examples, file analysis, explanations, discussion of specifics, and so on. That is what we have in store for us next. That is all for now. Thank you all. I look forward to seeing you in our course. See you soon. Bye-bye.